All right, let's jump right into it with JP Morgan's 2024 mid-year outlook report.
This one's called A Strong Economy in a Fragile World.
Catchy, right. And at the beginning of the year, everyone was bracing for a downturn.
Doom and gloom.
Yeah, exactly. But the reality,
It's way more interesting than that.
it really is. It's fascinating, actually. You see this disconnect between, well, the general mood out there and what the data shows.
So, not the 2010 repeat everyone was expecting.
Not at all. The global economy is holding steady. More than that, it's actually exceeding expectations when you look at the growth numbers.
I mean, this report actually shows economists are upgrading their growth forecasts for 2024. Up, not down. Not what you'd expect, right?
Right. And it's not just those big picture numbers either. We're seeing a strong job market, wages are increasing.
Which is great, but it does feed into the inflation we're seeing.
Yeah.
But companies are reporting record profit margins. All really solid indicators.
So it's not all doom and gloom, but this is where that fragile world part comes in, right? It's not all rosy. What's the catch?
Well, inflation is definitely one of the big ones. It's stickier than anyone anticipated, not going away anytime soon, and that has implications.
Okay, let's unpack that a bit. What did that mean for our listener concretely?
Well, for one, it probably means interest rates are going to stay up there, elevated, for longer than projected at the start of the year. This impacts everything.
Everything.
Well, yeah, think about it. Mortgages, loan rates, how businesses are planning their investments, their expansion strategies. We've gotten used to a certain rate environment, and this kind of shift, it demands a whole recalibration of how we think about finances.
Recalibration. Yeah, that's a good word for it. And speaking of recalibration, this is where we have to talk about AI.
It's the elephant in the room,
Yeah.
or maybe the algorithm in the machine, so to speak.
Right.
This JP Morgan report makes a really compelling case
Okay.
that AI is about to have a massive impact on a global economy. Like historic shifts, think the steam engine, the internet, that level.
Okay, see, now you're speaking my language. The tech side of me gets pretty excited about this stuff, but we're not talking about some distant sci-fi future here, right? This report seems to suggest things are moving pretty quickly.
It's incredible, actually, how fast things are changing.
Like how fast?
Well, JP Morgan, they cite data suggesting that AI's boost to productivity. It could be felt twice as fast as what we saw with, like, personal computers and the internet.
Wow, okay.
To put it in perspective, the steam engine took over 60 years for its full impact to be really felt across the economy.
60 years.
Yeah. This report, using data from the IMF, estimates it could be closer to just 7 years for AI.
7 years. That's almost impossible to really wrap your head around.
Right.
So this isn't just about like some abstract economic indicator. This is going to change how we work, how we live, everything.
Absolutely. And I think it's critical for your listeners to really think about this in terms of their day-to-day life, their job, their future.
For sure.
One of the most concrete ways to illustrate this is the projected GDP growth.
Mm.
The report estimates AI could boost global GDP by, get this, 1.5% each year for the next 7 years.
That's huge.
It is. Think about the possibilities that unlocks, but also the disruptions that inevitably come with that kind of rapid change.
Yeah. It's exciting, but yeah, a bit daunting, to be honest. I mean, some sectors are going to take off, others are probably going to struggle. And what about all the jobs that are going to be, well, transformed by AI?
You're hitting on a really, really crucial point there. And, the report doesn't shy away from those concerns. In fact, it specifically highlights the urgent need for retraining and support for workers who may be displaced as AI becomes more integrated. It's something that policymakers really need to be focused on right now.
Yeah, I mean, it's not just about marveling at the tech itself. It's about making sure everyone benefits. That requires planning, a commitment to creating a more equitable future, not just a more automated one.
Precisely. This isn't something that's just passively happening to us. It's something we have the power to shape. And that means asking those tough questions, addressing potential challenges head on, making sure we're building a future where everyone has the opportunity to thrive.
For sure. And speaking of navigating change, this is an election year, and there's always a lot of speculation about how the political landscape might impact the economy, especially this year. It's funny, right? Every election year, everyone freaks out.
About the market.
Totally. It's all market crash this and volatility that. But you know what? This JP Morgan report, they take a totally different approach.
Oh, yeah.
Yeah, it's kind of refreshing, actually. They're not getting all worked up about those short-term market jitters.
Makes sense.
They're looking at the long game, especially when it comes to, well, something that impacts all of us, taxes.
Taxes. Can't escape them.
Nope. And they really dig into it, the report, I mean. They actually do this head-to-head comparison of potential Biden versus Trump policies.
Interesting. Trying to predict the future.
Not really predicting, more like they're saying, look, these are the two most likely scenarios and here's how they could play out. It's about understanding the long-term forces at play, not picking sides.
Gotcha. So what are they saying?
Well, they highlight tariffs. For one, big source of global risk, they say. Depending on who wins, we could see really different approaches to trade. International relations, the whole thing. Creates ripples, you know?
Definitely. So no matter who takes the White House in 2025, sounds like tax-aware investing is going to be more important than ever.
Exactly, being proactive, thinking long term. And you know what? The report actually gives some pretty good strategies for navigating this whole uncertain landscape. Well, they talk about capital gains taxes, for instance. Could be some big changes there. They suggest looking into things like opportunity zones.
Opportunity zones.
Yeah. Basically, there are these tax benefits for investing in certain areas, economically distressed ones.
I see.
Another thing they mention is shifting towards dividend-paying stocks. Apparently, those tend to be more tax efficient, especially compared to those growth stocks, the ones focused on capital appreciation and all that.
Huh. Interesting. It's always something, isn't it?
Always. But hey, knowledge is power, right? And speaking of, we got to address the fragile world part of all this. We've got this strong economy, but there's a lot of uncertainty out there. Geopolitical risks, you know? How do we reconcile those two things?
Yeah, it's the big question, isn't it?
It is, and the report actually tackles it head on. They acknowledge the risk, but then they hit you with this stat. Are you ready for this?
Hit me.
Since World War II, every single major geopolitical event, and we're talking 36 of them, every single one has resulted in U.S. large-cap equities bouncing back within 6 to 12 months.
Wow. Every single time. It's well, that's actually kind of reassuring.
Right. It's like the market always bounces back. Eventually.
It's a good reminder. But, and I think this is important, we can't just throw caution to the wind, right?
Oh, absolutely not.
Diversification is key. Always.
Yeah.
And that's where the report gets really interesting. They highlight these areas of opportunity, things that this global uncertainty has actually created.
Okay, I like the sound of that. Give us the inside scoop. What opportunities?
Well, for one, defense spending. Likely to surge, they say. Same with cybersecurity. Those sectors tend to do well when things are a little more, well, uncertain.
Makes sense. What else?
We're seeing these huge shifts in global supply chains. Latin America is poised to become a real powerhouse, especially for those critical materials, copper, lithium, all that stuff that goes into those EV batteries everyone's after these days.
They even give a shout out to Japan in the report. Seems like they're finally shaking off those decades of economic stagnation.
It's true.
Yeah.
Japan's been making some really interesting moves lately. Shareholder-friendly reforms, improving corporate governance, that sort of thing, and it's starting to pay off. They could be a real bright spot moving forward.
I like it. Bright spots in a fragile world.
Exactly. But I think the biggest takeaway, and the report really hammers this home, is this. This is not the time to panic. If anything, it's a time to be strategic, to be informed, and maybe even a little bit bold.
I like that. So, in a world that feels anything but certain, how are you going to position yourself for a strong economy in a fragile world? What will you do today to harness those opportunities?
That's the question, isn't it? What will you do?
That's all the time we have for today's deep dive. Thanks for joining us, and we'll see you next time.